What's up, everybody? Welcome to the Stocks channel. My name is Corey, and in today's episode, we're going to talk about how to navigate a stock market correction. If there is going to be a stock market correction around the corner, how do you position yourself going into the correction, and how do you survive a correction unscathed? First up, we're going to take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. First up, a real quick update on the $1,000 account challenge is we did have a very good day today. And now for the month, we are up 26.52%. So don't forget, if you want to follow along with the $1,000 account challenge, you can come join the Stocks channel Discord, where I'm giving every single entry and exit trade that I make for this $1,000 account. The goal of this challenge is to see how much money I can turn $1,000 to by the end of the year. So this is a great way to learn how to trade the stock market going through the entire year, because I will have to find trades for this account through all conditions of the market. So it's a very exciting challenge, and I do like the challenge of having only $1,000 because I do have to think about every trade very closely before I enter it. So if you're interested in this challenge, come check us out at the Stocks channel Discord, which you can find out how to join by clicking on the link in the description of the video. Alright, so jumping back over to the S&P 500 SPY ETF, we did see the SPY going up 0.86% today, but we did get another price action close below the 20 simple moving average. So one thing I want to talk about tonight is how to navigate a stock market correction, and how do you properly prepare and position yourself going into a correction. Remember, we never know exactly when a correction is going to come, but if you're starting to get nervous and you want to plan for a correction, this is how you do it. So after yesterday's sell-off, there was a lot of people that thought the correction was here and that we were just going to continue the sell-off today. And I said that we're not quite there, and the market still has some bullish technical trending, which means we're likely to continue to head higher. A lot of people didn't like hearing that, and they thought I was just being a permabull who thinks the market's going to go up forever. However, I also said in last night's video, if you want out of a stock market correction, you don't panic sell. You sell on the bounce. As of today, you saw that we did bounce all the way back up to that resistance level, which was also a gap that I did say we were likely to test at 381. That was your chance to exit the stock market if you're getting nervous and you don't want to be on this wild ride anymore. That bounce is the best time to exit and raise a cash position, which I do recommend at least 50% cash on the Stocks channel Discord at these levels. So when you're a trader, you have to have cash available, because if you get caught in a stock market correction with no cash, you have nothing you could do except liquidate your losing positions and take that big hit. If you have cash, you can always hedge, and you could always look for another trading opportunity to constantly make profits for your account no matter what the market conditions are. So if you want to be a disciplined and profitable trader, you have to know these things, and you have to have that discipline to raise cash and know when to sell, when to take profits, and when to take losses. So today was the perfect opportunity for all of you bears who are getting worried that the stock market's going to crash and you want to exit your position. That was your resistance level that you want to sell at. So as you can tell from the trend, we are starting to see some bearish trending developing, but we don't quite have a confirmation of a bear trend just yet. The 5 EMA is still trading over the 13 EMA, and we do have 2 price action closes below the 20 simple moving average, so we do have relatively bearish price action. However, the price action is still holding up above a positive sloping 50 EMA, which means this could just be a false breakdown, and it could easily just be a bear trap trying to trap the shorts before the market continues to head higher. So don't try to call a top in this market. If you have enough cash on the sidelines, you're ready for any market conditions. If the market continues to go higher, you're making money, and if the market starts heading lower, you have money to put to work to make more money on the way back up. So don't fear stock market corrections. They are 100% normal, to be expected, and they're actually healthy for every bull market, because they give us another base and another foundation to continue to head higher from. So as far as the price action goes, we're still holding up above that support level at 377, and we're hanging around that 20 simple moving average very closely. So it's still very possible for this bull trend to continue, and we could come back up to this 381 level and possibly break right through it and close this gap at 383. I'm not saying that we'll definitely do that, but it's still highly likely, and it's very possible because we still have bullish trending in this market. The trend is your friend, and it will always help guide you on which direction the market wants to go. If the trend is bullish, you should always have a natural bullish bias. That's not being a permabull, that's called being smart and following the technical trend. It's strictly objective, and if the trend is bullish, you don't want to become bearish just because you're getting scared. So follow this trend and pay close attention to the price action, because if we continue to break down from here, there is a support level much lower at 370. Remember, the number one support level we need to watch is all the way at 365, because if we break and close below that, it does mean that we're highly likely going to close the gap at 358. However, that is a long ways away, and we still have a lot of price action to go before we know if the market wants to actually go down there and close that gap. You could see today we did have some very bullish price action intraday, but we did come into some very strong resistance, and there's still a ton of earnings reports that a lot of people are worried about, so they're taking profits so they don't get caught holding the bag. It's completely normal, and as earnings reports continue to come out, they will surprise the market to the upside or the downside, and that will eventually set the trend on where this market's going to go. So right now, be flexible, take the market day by day, and don't forget to follow the price action and the trend, because they are the most key things that you want to follow in this market. So we could still find resistance at the 380 and the 381 level, but if we start breaking and closing over 381, this market will start looking very bullish yet again. It's going to take a break and close below the 50 EMA down at 370 to get bearish on this market. So at this point, we're at a crossroads between a bear market and a bull market. So you want to have that cash and you want to be disciplined in taking profits. This is not the time to be getting greedy on this market. Next up is the Nasdaq 100 QQQs ETF, and we see the Nasdaq is actually holding up very well, and we did find resistance at that gap, which was at 326. That gap did hold up as resistance, and we did close back below the 5 EMA for another day in a row. But you can see that we still have a very strong bull trend, and we're still holding up above a positive sloping 20 simple moving average. So the Nasdaq 100 is looking much stronger than the S&P 500, and the Nasdaq can continue to carry this market higher if that's what it takes. The tech sector has carried the market higher in the past, and we could see some weak sectors get carried by the tech sector because they do have a lot more weight in the S&P 500. So strong support levels on the QQQs are at 319, 317, and down here at 313. If we start breaking below 313, we're looking back at this 308 level, which is right around the 50 EMA. Remember, bull markets are higher highs and higher lows, and as far as we know right now, we're still in a bull market with a strong bullish trend, even though we are seeing some volatility, which is completely expected around earnings season. So the Nasdaq is still looking good, and it doesn't look like we're necessarily going into a stock market correction at this point in time. But it's not a bad idea to be disciplined and be ready for any market conditions. You're never going to be upset about missing out on a little bit of profit if it saves you from a huge loss on the way down. So just be flexible and trade the chart that's in front of us. Next up is the Dow Jones DIA ETF, and we did see the Dow Jones going up about 0.93% today, and we can see that bearish momentum starting to pick up here with the 5 EMA starting to cross below all the moving averages. We're still holding up above a positive sloping 50 EMA, so the price action and the trend still can reverse back to a short-term bull trend and continue to head higher. You can see that the Nasdaq 100 is definitely looking stronger than the S&P 500 and the Dow is by far looking the weakest. Next up is the ARK ETF, and we still see the ARK ETF holding up above a positive sloping 20 simple moving average with a bullish trend. We did close back above that 139 level, which means we could go back to the 144 price target. The ARK ETF still has bullish price action with a bullish trend, which means it can continue to trend higher. Next up is the VIX, which is the fear indicator. And remember I said last night, the VIX is telling us a very important story, and we still see a very elevated VIX today. We did drop negative 18% on the VIX, but we're still holding up above that breakout, which is now acting as support. Normally, that means the VIX does want to spike again if we continue to hold up above this breakout. So I would look for one more day to see what the VIX does, but if we hold above this level for one more day, it does mean we could see some drastic selling come back to the market. So the VIX is that fear indicator that we want to pay attention to, because if fear is elevated, it does mean we could go back into a stock market correction. On the US dollar, we're seeing confirmation of a weak dollar still holding up below a negative sloping 50 EMA. The trend is somewhat neutral, just sort of going sideways below the 50 EMA, and the dollar does look weak, like it's ready to head back down for another leg lower. There's support down at 89, and until the dollar breaks and closes above the 50 EMA, I'm expecting to see the dollar continue to weaken. On gold, we're still slowly drifting down towards support at 1826, and we need to see if that level is going to hold up as support and see if we can bounce off of that level and start heading higher. On silver, we had a huge day today, going up almost 5% and getting up to our price target at 26.56. So now that we're at resistance, we need to see if silver can break and close over that level, and if it does mean we could get to $28 in a hurry. So silver is looking much stronger than gold, and it does look like it's trying to get ready to run, but it has to break through this resistance level before it can do that. On Bitcoin, we're finally seeing the price action looking bullish, and we're back to closing over the 5 EMA and the 13 EMA. We can see the 50 EMA did act as a great support level, and that is a positive sloping 50 EMA. So if you compare Bitcoin to the stock market, you could see that the 50 EMA is still positive sloping, the price action is holding up above that level, and it does look like the bullish trend is getting ready to continue. So the stock market is likely going to do something very similar, where it's testing those support levels and it's trying to make sure that those levels are still holding up before it continues to head higher. So Bitcoin is looking really good off of these levels, and that $30,000 support level is really holding up well. So if Bitcoin continues to head higher, it could be a good sneak peek at what the stock market wants to do in the very near future. On Amazon, we're still stuck in a sideways consolidation, but we are building up some bullish momentum. Amazon is coming into earnings, and there is a strong resistance level at $3,300. If we break and close over $3,300, it does mean that we could start running towards $3,400. So Amazon's looking good in the short term, but it is still stuck in a sideways consolidation. On Apple stock, we did test the breakout of 136 as support, and currently that support level around 136 is holding up. If Apple can bounce off of this level, look for it to head back to 141 and 145 if that level is broken. Apple is a market moving stock, so if it's heading higher, expect to see the rest of the stock market going higher with it. On the financial sector, we did get a confirmation bounce off of that positive sloping 50 EMA today, and we do need to continue to bounce to get this short-term bear trend to reverse into a bull trend. On the industrial sector, we did get a bounce off of support down here at $85, but the price action is still trading below all of the moving averages. You can see the bearish momentum is picking up, and it's not looking great for the industrial sector. On the healthcare sector, we did see a bounce today going up 1.46%, but we did get another price action close below the 20 simple moving average. The healthcare sector needs to continue to climb from these levels to maintain this bullish trend to continue to head higher. So going back to the S&P 500, don't worry about a stock market correction, just prepare for one. There's no reason to panic, and there's no reason to sell at support levels. If you want to get out of this market, get out on these bounces like we had today, and then be comfortable holding cash and don't FOMO back in at the top. If the market continues to climb from here and you missed out on the opportunity, you have to be okay with that because you don't want to buy back in at the top before the real stock market corrects. This market loves tricking the retail investors, and it will look like a very tempting market before the real correction comes. If you're getting scared and you're getting nervous and you think the correction is here, it's likely not actually here yet because the smart money loves to trick the retail investors. So just be disciplined, have a trading strategy, and stick to it. And don't forget, on the Stocks Channel Discord, we're a very profitable and disciplined trading community, and we're absolutely crushing this market. So if you're looking for a trading community, come check us out at the Stocks Channel Discord, which you can find out how to join by clicking on the link in the description of this video. So next up, let's go ahead and check in on the Stocks Channel Hot Stocks. Welcome to Hot Stocks. If you didn't watch the beginning of the video because you jumped straight over to Hot Stocks, there is some very important information in the beginning of the video on how to navigate a stock market correction. So if you're interested in that, go ahead and check it out. So first up on Hot Stocks, let's take a look at Tesla stock. And we did see Tesla going down negative 3.32% today after their earnings report. The good news is we are still holding up above that 20 simple moving average, and we still have the benefit of a bullish trend. So it's not too late for Tesla to continue to trend higher, but we're definitely starting to see some weakness in this stock because we're now closing below 2 of the moving averages. We were holding up above the 5 and the 13 EMA, and now we're closing below both of them, holding up above a positive sloping 20 simple moving average. I'm actually not surprised in the least to see Tesla test that 20 simple moving average, and it is a positive sign that Tesla found support at that level. So it's fully possible that Tesla continues to trend higher from these levels and tries to get back up to my price target at 906. Now that we're below 858, I do expect to see that level continue to act as resistance, so that will be a price target and a resistance level that we need to blast through before we can get to 906. Remember, on Tesla, we are in a 5th wave, which means we could be near a market top for the Tesla stock, but I'm going to remain bullish on Tesla as long as the chart is bullish. So it still looks like we're trending upward, but we're definitely losing a little bit of momentum the longer we spend below that 5 EMA. So look for Tesla stock to try to break over 858 and run to 906. But if it does start breaking down below this $820 level, it could mean that we saw the top on Tesla and we need to go through a correction. So watch those levels very closely because they're going to be very key. Next up is NIO stock, and we saw NIO stock looking good today, going up over 2%. We did find support at that $55 level, and we did bounce and close over a positive sloping 20 simple moving average. So NIO stock still has bullish price action with bullish trending, and it does look like it's getting ready to start heading higher. There will be resistance levels at $61 and $65, and those could be very strong resistance levels, especially that $65 level. So if NIO can break and close over 65, it is likely heading back to 67, and if it breaks over there, it could run to 70. As far as support levels go, we want to see NIO stay above this 20 simple moving average at 57 and the support level at 55. If NIO does start breaking down below these support levels, it means we likely saw the top and this is the end of that fifth wave, just like we saw with Tesla stock. So we're definitely near the end of a cycle in this market before we go into a correction, but we're not quite near the top just yet because there is some more upside we can run before we see the end of this bull run. Next up is Palantir stock, and we saw Palantir breaking down today a little bit, closing down negative 8.5%, but that's not surprising after this monster impulsive move that we had. We did get very close to the price target at $45, but we did suffer for it because we went way too far, way too fast, and we were well outside the upper Bollinger Band. So it does look like Palantir is finding support around the 5 EMA at $35 and the previous resistance level at 36. There's still support on Palantir down here at 29, and the price target I have on Palantir stock is still $45. If we break and close over 45, there is another price target above on Palantir, which we could get to in a flash. Next up is Zoom stock, and we saw Zoom stock doing pretty well today, going up over 2% and closing right on top of that 5 EMA. Zoom stock is still finding resistance at that $383 level, and Zoom stock is consolidating and building up momentum in this bull flag, getting ready to try to break through 383 and the 50 EMA up at 390. If Zoom can start breaking and closing over the 50 EMA, it should start running and we should get to my real price target at $418 in no time flat. If we break and close over 418, we can continue to run into the mid $440 levels. So Zoom stock is still very bullish and it is holding up above this 20 simple moving average. And you can now see that the 20 simple moving average is no longer negative sloping and it has flattened out and it looks like it's getting ready to start sloping to the positive direction. So there is a lot of bullish momentum picking up in Zoom stock, and I'm very bullish on this stock because I do think it's going to start running very soon. And when it does start running, you better look out because it's going to have a lot of momentum and it's going to move in a very impulsive way. Next up is Salesforce, ticker symbol CRM, and we saw Salesforce going up about 0.77% today, and we're still finding resistance at that 50 EMA. CRM stock is very similar to Zoom stock, where it is finding resistance, but it is building up some bullish momentum below these resistance levels. So you can see the 20 simple moving average is flat and it looks like it's getting ready to start sloping upward, and we do have a short-term bull trend building on CRM. So this stock does look like it's getting ready to run, and it should move in a very impulsive way, just like with Zoom stock. Price target 1 is 232 and price target 2 is 238, and we should have no trouble getting to those levels. So don't forget, there's brand new hot stocks daily on the Stocks Channel Discord, and there is a brand new hot stock coming next week that I've already given to my Discord members on the ground level. So if you want more hot stocks daily and you want to get in at the ground level before they start running, consider checking out the Stocks Channel Discord, which you can find out how to join by clicking on the link in the description of this video. So good luck in this market, everybody. I hope you're crushing it and making a ton of profits. And as always, I will see you in the next episode.